It's Thursday, June the 7th, and this is James Shrug with Westpac London's end of day report. Amazingly, Northern Hemisphere, particularly European markets, managed to build upon their pretty impressive gains yesterday. Certainly helped along by the surprise rate cut from out of China. The quarter point cut, which we had actually been expecting it, to come through at some point in the third quarter of this year. The quarter point cut follows a range of reserve rate cuts, that is, cuts to the amount of deposits that the banks effectively have to hold in reserve and not lend, and other more targeted stimulus measures. But it's the first really broad-based policy move, since the concerns about the slowing economy began to emerge and inflation concerns diminished. In fact, it's the first rate cut in 4 years in China. Now, yesterday's big rally was partly built on the view that just maybe there's, we'll put it this way, people who invest in risk assets, their holy grail is coordinated stimulus from, say, the Fed, the European Central Bank and China, which would boost equity markets, equity markets, commodity prices, currencies like the Aussie dollar and so on. Yesterday's rally was partly based on an expectation that maybe the possibility of some sort of coordinated policy action, at least in part of that, those geographies, might be a little bit less outrageous, given recent G7 comments, given the seriousness of the problems in Europe and so on. But no one really expected a rate cut to follow from China the next day, and so that helped markets build upon yesterday's gains. Also, we had Janet Yellen, the Vice Fed Chairman, last night, sounded quite dovish, and then Bernanke today said basically the two main risks confronting the US economy are Europe and the budget position in the US and the automatic fiscal tightening that takes place next year unless Congress can do something about it. So he said the Fed has tools to deal with that, but didn't say what those tools particularly were. He likes to keep his tools private, although after the June FOMC meeting, Operation Twist finishes. So if there is going to be some sort of follow-up to that, then at that point, either at that meeting or at the press conference following it, we should get some idea of what policy tools he's going to employ after June. The Bank of England left rates on hold today. As expected, they didn't move on their asset purchase target either. We still think there's going to be an increase to the asset purchase target, but maybe the recent run of optimism convinced them to keep by the sidelines just for the time being. Spain has had a reasonably successful bond auction. They paid more than 6% for some 10-year bonds that they issued, but they managed to issue just over their maximum target. So it looks like they haven't quite lost access to financial markets just yet. I think that's it. Bernanke, Yellen, China, Bank of England, Spain. And on the data front, US initial jobless claims fell about, I think it was 17,000 in the latest week. There's still an uptrend in place from February. The labour market has weakened since then, and that's apparent in other jobs data out of the US. But it looks like the sharp rise we saw in the previous week was just a temporary distortion or spike. That's about it for today. Just to give you some market numbers though, that's the main news events. London market up 1.2% today, the French market up 0.4%, the Germans up 0.8%, the Spaniards up 0.3%, the Italians up 0.9%. The Dow in the US up 0.75%. The US lunchtime, it's at 12,509 at the moment. On commodity markets, we've got gold down 2.4% today. Gold hedged against inflation. Gold, China rate cut. I have to think about that a little bit more before I sort of throw a reason at you. Oil up 0.25% today at $85.22 a barrel, and copper up 0.25% today as well. The Aussie dollar's had a pretty good run. It's at 99.4 US cents, I think, at the moment. It almost hit parity again from below after the Chinese rate cut, and the stronger Aussie jobs numbers provided some support to it as well, as has the positive equity market sentiment of late. Okay, that's about it for today. I will be back tomorrow. We've got figures to watch for in Australia tonight, housing finance, and the monthly trade figures. All right, that's it for Thursday. See you tomorrow.